Okay, so we're here with P8-35B. It says accounting for uncollectible accounts using the allowance method, and in parentheses, aging of receivables and reporting receivables on the balance sheet. Okay, and we have this blue line under the problem. When I hover over it, it turns red. That means I can click on that. That's from the back of the textbook, right? The back of the chapter. And it'll give me the My Accounting Lab version of that problem. So I don't have to do a lot of drawing and that kind of stuff. Okay, so it says, at September 30th, 2014, the accounts of Mountain Terrace Medical Center, MTMC, included the following. So they got their gross accounts receivable, $145,000, and then the allowance for bad debt, $3,100. Okay, and they indicate credit balance here. Of course, we already know, right, that the allowance is a contra asset account. So just, oops, did I hit the wrong button? Just for discussion purposes, what would be my net receivable at this point in time? Would it be 141,900 if I mentally did the math correct? Well, I mean 143,900. Let's see, 145. Right, you're going to take the difference. 143,900, 141,900. Yep. Okay. So your net receivable is always the difference between the accounts receivable gross balance and the allowance. Okay. Now it says, journalize the transactions. Okay, record debits first, then credits. Wrote off accounts receivable as uncollectible. So they wrote off these three accounts receivable: Scarlett for 1,100, Owen Wilson 700, and Patterson Inc. for 300. And it looks like they want it in detail, so I'm going to charge it against my allowance, okay, and then I'll have 3 credits, and it's going to want a memo, wrote off uncollectible account. So I got Scarlett Company, I got it backwards here, but that's fine. Patterson 300 and Wilson 700. So I got 2,100. Okay, that's going to reduce my allowance balance. Okay, after I book this transaction, since the allowance account has a credit balance, and I'm writing off 2,100 against it, that's going to bring my 3,100 down to, what is that, 1,000? Let's see. Okay, because it'll be basically the difference, right? This is a debit. Okay, so that brings that down to 1,000. Okay, now we're going to record bad debt expense based on the aging of accounts receivable. Okay, so I think we got to get to some additional information here. Let's see. Here's our aging schedule. Okay, and they want to record bad debt expense. So what we have to do is, okay, we got to go back and do these calculations. So I'm going to use my calculator. And it says 2% of the 1 to 30 day balance will go uncollectible. So that's 97,000 times 2%, 0.02. So that's going to be 1940. And I'll just put that into my memory, right? Memory plus MP. And I can hit. Did I go 0? Oh, yeah, you're right. Okay. Good catch. Memory clear. Okay. 0.2% is going to be 0.002. Okay. So instead of just 0.02, we got to go 0.002 times 97,000. Okay. We'll put that into memory. And then we'll come over here, and 2% of 44,000 gives me 880. I'll dump that into memory too. I'm just going to tally it all up. So that's just getting added to memory. And then I got 16,000 times 20%. So what would that be? 3,200? Rely on your calculator if you're not sure. Okay, put that into memory. And then I got 25% of 8,000. So what is that? 2,000? 8,000 times 0.25. Okay, put that into memory. Okay, now we'll do a memory recall. What it's saying here is that our allowance balance should be 6,274. That's what we want our allowance balance to be. Okay. Now think about it. What is our allowance balance right now? Based on what went down so far. Okay. You see, we started with 3,100, right? But we made an entry that reduced it to 1,000. Okay. So we have 1,000 sitting in there already. And what we're saying is we need the allowance to be 6,274, but we already have 1,000. So our entry only needs to be 5,274. Okay. Does everybody see how I did that? Okay, let me diagram it. Okay, let's see. Let's record bad debt expense. So if we took this thing, right? And like I always said, I did that in my head, but it would have probably been better for me to have done a T account, right? Okay. Oops. So here's our T account. This is our allowance. For bad debt. That's what they call it. So if you had this T account going, if you had it handy, right? And you look at this, okay, you start off the accounting period with a 31 beginning balance, okay? And then over here we have a debit because we wrote off some of the accounts receivable. So you got 2,100, this is the write-off. We wrote off 3 receivables, okay? So your balance before any adjustment would be this 3,100 minus 2,100. This is the unadjusted okay. And then we did some figuring, right? We took this schedule here, right? And we multiplied, hopefully we multiplied right. And we came up, right, after multiplying each of these by their gross amount, each of these percentages, and then totaling that up, we say, okay, we want to have 6,274 in our allowance account, right? So we actually have a targeted balance, right? And you could kind of maybe make another line like this and say, this is the balance that we want. Okay, this is the desired balance. Or your targeted balance, right? The balance that needs to be in our allowance account when we finalize the books, right? Okay. But we have 1,000. We need 6,274. So that means that our adjustment has to be 6,274 minus what's there already, 5,274. That number is derived. That's the number we're backing into. We're backing into that 5,274. And the way that you make that entry is by debiting bad debt expense and crediting the allowance. Okay? Does that make sense? Okay, now there's a situation. This was a pretty clean situation. But there could be a situation, let me steal this. Maybe something like this. Okay, we'll take these things out of here. Okay, there could be a situation where your unadjusted balance might be sitting as a debit. Now, why would you have a debit in your allowance account? Think about what we did before this, right? Let me get that other one out of the way so you can just focus on this. How could I end up with a unadjusted balance that's a debit? You know, our allowance account has a normal credit balance, right? It's a contra asset account. But what would have caused my allowance account to show a debit balance? Anybody? Now that's just an example. That 8,000 is just an example, right? What might have done it is, I might have wrote off, like in this case, what if we wrote off $5,000, right? Instead of 2,100. Make it 5,100, right? If we wrote off $5,100, that effect would have been, right? If we wrote off 5,100, go like this. Debit allowance, I'll just abbreviate, right? And credit accounts receivable. And if we wrote off 5,100, okay, in our previous scenario, and we're sitting there with 3,100, and we do a write-off of 5,100, now all of a sudden that balance swung over to the debit side. You wrote off more than you had in the allowance. Okay, remember the allowance is an estimate, right? There is a possibility that you would write off if you had a bad, you know, a bad business cycle and a bunch of your customers had a hard time. They might not be able to pay, and you might have wrote off more than you anticipated. That would have swung it into a debit balance. Okay. Now, take our same number. If that swung it into a debit balance, and we're targeting, what were we targeting? 6,274? Yep. Take the same situation now. If I'm targeting 6,274, right? What do I have to, what would I have to debit and credit to my bad debt expense and to my allowance? If I'm still targeting that 6,274, that means I'm trying to get over here to 6,274, right? This is the desired. What do I have to do to get that $2,000 debit balance up to 6,274? I gave you the shell of the entry right here in yellow. If I can find yellow. Okay. But what number do I have to put in there? What do I have to do to get this $2,000 debit balance to the 6,274? You can see that, right? You can see that I actually have to do the full 6,274 plus another 2,000, right? By doing 2,000, it gets the account to 0. And then I need another 6,274. So I actually have to do 8,000. 8,274. And you could just post this and do the math, right? If I did 8,274, this is my adjustment. Put it down here so it doesn't throw you off, right? Take this out, okay? Right? So you take 8,274 minus 2,000, that'll give you 6,274. You gotta get your brother.
Yeah.
All right, let's see. Okay. Does that make sense? So you could be making, you know, a bigger entry than you think based on what you compute from that aging schedule. So we're always trying to back in to the right amount to get us to that desired balance in the allowance account. Okay, and we were able to do that here. Now they just want me to do what I just did in Excel. So we'll put the postings in. We got a beginning balance of 3,100. That's our September 30th balance. Then we had some write-offs, right? So write-offs equated to 2,100. And then I think they want to take an unadjusted balance of 1,000, right? Unadjusted balance. Then we make an adjustment. I think it was 5,274, right? This is the, or did I jump the gun here? Yeah, this is the bad debt adjustment. And then we're going to have a new balance of 6,274. This is our December 31st balance. And we got it. Okay. So on our balance sheet, we're going to show our accounts receivable, and we're going to show it net of the allowance for bad debt, which we know is 6,274, right from the account. I just pulled it down. And then let's just make sure there aren't any other sales. Oh, I'm sorry, okay. So we're going to use this figure, right, from the aging schedule, the total accounts receivable. So 165. And the difference between the two will be our net receivable. So if you take $165 and subtract 6,274, your net receivable is $158,726. Oops. Oh, I'm sorry. Look at how they cut me on this one. Do you see that? I didn't even see that. It says add. It's actually less. We did the math right. This thing should say less allowance. That's kind of a curveball they threw in there. Okay. Any questions on that one? Anybody? Where I got anything from? Okay, that's a pretty good problem. I like that one. Let's see. How do we get back to this?